It's clear that if this is approved, it'll be a big win for mutual fund holders. Would it also benefit ETF holders?
Thanks for having me on the show, Matt. And the answer is yes. It would benefit, in our view, both mutual fund and ETF shareholders. And the reason behind that, Matt, again, in our view, is because we think the potential tax efficiencies that ETFs can bring to the table can benefit the mutual fund shareholders. And then mutual funds transact in kind. And the way the Dimensional transacts, we do a little bit of portfolio turnover each and every day. We do a little bit of rebalancing each and every day. And those cash flows can be used opportunistically to potentially benefit both mutual fund and ETF shareholders. So we think that this could be a win-win for both mutual fund and ETF shareholders if the SEC were indeed to grant this exemptive order.
If approved, Katie was just showing the outflows from mutual funds, inflows into ETFs industry-wide. It's been a trend. Does that then turn around for you? And how does that, how do the tax advantages that ETFs have and mutual funds don't also change?
So if it were approved, our view is that it gives a kind of another tool, and this is the way that we view it, to money managers to help improve portfolios and make them even more efficient. What it might do to future flows, we don't really have a strong view on that. Our view is that for our clients, we like to provide the best-in-class mutual funds, best-in-class ETFs, best-in-class SMAs, and so we do whatever we can to improve the structures of each one of those vehicles through time. So I think that additional tool can be helpful for both mutual fund and ETF investors.
So let's talk about the SEC here, because as you and I chatted about last week, whether or not the SEC actually grants exemptive relief, there's no real deadline here. And we've seen others try and fail, such as Van Eck twice, I believe, in the last decade or so. So when you think about your chances here and the fact that the SEC doesn't necessarily have a deadline to respond, has the regulatory attitude changed at all in your view?
We've had conversations with the SEC staff on this topic previously, and our conversations, in my view, have been encouraging. Our arguments, I think, are compelling about why this can be helpful for investors, and in particular the investors in our mutual funds. So we look forward to continuing to engage with the SEC staff on this topic. When we might get a decision from the SEC, that remains to be seen. But we've had a lot of positive feedback over the course of the past week from other managers in the industry. So you may see more applications for exemptive relief going into the SEC, and that may indeed, raise its visibility with the SEC staff.
Well, Gerard, on that point, that if we see more asset managers come up to the line here, that it could raise the visibility, it seems like a lot of your strategy, your odds for approval, depend on other asset managers also applying for that. And to that idea, have you been in touch with some of your peers about applying for this, basically lobbying for this?
Well, I think that our odds for getting this approved depend on the merits of our arguments and the interaction that we will have with the staff, because exemptive relief is approved on a case-by-case basis, typically with the SEC. So our view is, let's get our arguments tight, let's get the conversations continued with the SEC staff and make sure they understand the benefits that we view could be accrued to the shareholders of our mutual funds if they were indeed to grant us this exemptive relief.
Do you have new products planned if this is approved, Gerard, or do you or would you make existing ETFs a share class of existing mutual funds?
Well, we always have new things in the works and are always listening to the financial professionals that we work with.
I mean specifically for this, in the case of this approval.
In the case of this approval, the step, if we were to get approval, the next step is talk to the financial professionals we work with, but also you need to get a fund board approval. So that would be a case by case. But there are many strategies that we have a mutual fund format, like in micro caps and so on, that we do not have a standalone ETF available as of yet. And so we would look across the range of strategies and work with our clients in the fund board to decide which would be most appropriate to have an ETF share class if indeed this were to be approved by the SEC.
And Gerard, zooming out from just the topic of exemptive relief, if we take a look at Dimensional's lineup right now, you have 31 ETFs. As our intro said, you're the largest active ETF manager. Of those 31 ETFs, all 31 have seen year-to-date net inflows, which not a lot of issuers can say. Where are those inflows coming from? Are they organic, so to speak, or are they basically assets that are coming from other parts of Dimensional stable of funds?
After we launched ETFs back in 2020, what ETFs provided us is the ability to work with a broader range of financial professionals than we had done in the past, because there were many financial professionals that used mainly ETFs only. So it's really expanded our opportunity set to work with a broader range of clients, and a lot of those flows have come from new clients, whether they're independent financial advisors or clients that work at large broker-dealers or bank trusts. So a lot of kind of healthy flows into our ETFs, and you're right, about 16 billion more or less into our ETF lineup year to date.
And I do want to end where we started, which of course is on exemptive relief, because one of the reasons that a lot of people know Dimensional in the ETF industry is because you were very aggressive when it came to mutual fund to ETF conversions. I believe all told, you converted nearly 40 billion of your mutual fund assets into ETFs. If you were approved to issue ETF share classes of your mutual funds, would that effectively put an end to your conversion strategy?
Yeah, you know, the funds that we targeted for conversion were tax managed or tax advantaged, and so 99+% of the assets in those funds were in taxable accounts, and that was the facts and circumstances with those funds. For the ETF share class, I think that it will be case by case. We have to work with financial professionals that we engage with, and some may prefer standalone ETFs, some may prefer ETF share class, some may prefer mutual funds. So it's too early to say yet, Katie, as to what we may do in the future with respect to conversions or offering ETF share classes, if indeed we got that approved by the SEC.